Well, hello, everyone. Are you looking for a way to invest in the stock market without the hassle of having to pick and choose stocks? Well, lucky for you, there's definitely a solution in the market for investors who are interested in passive investing and looking for a low-cost fee approach to investing in the stock market, and that's through the all-in-one stock ETFs. In this video, we'll be going over the top 6 ETFs for Canadian investors, allowing them to invest for growth investing at a low cost here in Canada. At the end of the video, I have a bonus piece for you. I'll be sharing with you which one of these 6 ETF I'm personally invested in, and I put close to almost $1,000 in that funds. Before we dive into and looking into the top 6 all-in-one ETFs for growth investing in Canada, we're going to take a quick peek at the definition for what is an all-in-one ETF. These are exchange-traded funds or index funds that are aimed to provide convenience for retail investors who seek a cost-effective way to invest in the stock market without the hassle of picking and choosing stocks. And it typically consists of a handful of underlying ETFs within them. Through an all-in-one ETF, you're essentially getting a full exposure diversified to not only US stocks and Canadian stocks, but also to international markets and emerging markets. The gross all-in-one ETFs have anywhere between 80% to 100% exposure to stocks, and depending on their risk tolerance level, you might get somewhere between 0 to 20% exposure to fixed income. The first ETF for us to review is Horizon's Growth Tri-ETF portfolio, ticker symbol HGRO. It's available in Canadian dollars and has an expense ratio of 0.17%. The Horizon's Growth Tri-ETF portfolio currently has $171.8 million assets under management, and it does pay a very minor distribution, which is paid annually, currently only yielding 0.04%. The chart at the bottom right of the slide shows you the performance all time in the past 5 years for this ETF. The truth of the matter is this ETF hasn't been incepted that long. In fact, it was incepted back in September 13 of 2019. So its return since then is showing an overall 27% plus gain. HGRO seeks long-term capital growth using a portfolio of primarily equity-focused total return index exchange-traded funds, which is 100% exposed to the stocks. And if you look at the holdings for HGRO, about 35% of it is exposed to US large cap, as well as another 15 or 16% exposed to NASDAQ 100, which makes the total exposure for US stocks to about that 50%. Next, we have one of the underlying funds that gives you exposure to the Toronto Stock Exchange, close to that 15%. You have about 25% exposure to the international market, international developed markets, and the remaining 10% or so is giving you exposure to the emerging markets. The second pick for us to review is iShares Core Equity ETF portfolio with ticker symbol XEQT. It is offered by BlackRock, does pay a distribution yield of 2.69%. Their distributions currently are paid on a quarterly basis, and XEQT have an assets under management of $1.54 billion. From an expense ratio for this fund, the MER is at 0.20%. XEQT provides long-term capital growth by investing 100% in stocks, primarily in one or more exchange-traded funds, which are managed by BlackRock Canada, or affiliate that provide exposure to equity securities. It was incepted back in August 7th of 2009. Since then, the overall return is showing to be up by 24%. If you look at the top holdings for XEQT, you notice about 45% of the exposure is to US stocks. Then you have about 25% exposure to Canadian stocks, Toronto Stock Exchange, another 25% exposure through XEF to the international markets, and the remaining 5% or so is provided to emerging markets. Moving on, the next ETF for us to review is iShares Core Growth ETF portfolio, another product by BlackRock with ticker symbol XGRO. The main difference between XGRO and XEQT that we reviewed a few seconds ago is that here for XGRO, your exposure is 80% to stocks and 20% to fixed income, whereas for XEQT, your 100% exposure was to stocks. So XGRO could be considered slightly less aggressive in comparison from exposure to the stock market. It does pay a distribution yield currently yielding 1.45% and has an assets under management of $1.5 billion. From an expense ratio perspective, XGRO has an MER of 0.20%. It was incepted back in June 21st and this goes back to 2007. So if you look at the past 5 years return for this fund, it's up by 15%. XGRO seeks to provide long-term capital growth, as pointed out, through 80% in stocks and 20% fixed income, primarily in one or more exchange-traded funds managed by BlackRock or its affiliates. In terms of the holdings, top holdings, you do notice that we get around 37% or so exposure to US stocks. You have another 20% or so to international markets, another 20% to Toronto Stock Exchange, about 4% to emerging markets, and the remaining balance is in different types of funds, and that gives you exposure to bond fixed income. Next, we have Vanguard All-Equity ETF portfolio with ticker symbol VEQT. It is available as well in Canadian dollars, has an expense ratio of 0.22%, currently has a higher distribution yield at 2%. The fact that many of these distributions yield have been adjusted upwards because the price of these equities have kind of gone down in the past several weeks and months. And that's why the 12 months trailing yield for them is slightly higher. In terms of assets under management, with VEQT, you're looking at $2.42 billion in assets under management, and it has its distributions paid only on an annual basis, typically in the month of January. VEQT seeks to provide long-term capital growth by investing primarily in equities, securities, and it has its underlying funds that are expected to consist of index funds, providing exposure to broad-based equity markets. It was incepted back in January, in fact, January 29th, 2019. And if you look at the return, overall return since then is up by close to 29.9%. VEQT has four main underlying funds. The major one is Vanguard US Total Market Index ETF, which accounts for about 43% exposure. Next, we have about 30% exposure to the Canadian stocks with Vanguard FTSE Canada All Cap Index ETF. Following that, we have 20% exposure to the international markets, the FTSE Developed All Cap excluding North America Index. And lastly, around 7% or so exposure to emerging markets. Next, we have another product by Vanguard Growth ETF portfolio with ticker symbol VGRO. Similar to BlackRock family of ETFs, with VGRO, you're getting 80% exposure to stocks and about 20% exposure to fixed income. VGRO was incepted back on January of 25th of 2018. And if you look at the past 5 years return for that, it's showing to be up by 21.2%. It has a higher expense ratio compared to the rest of the funds we reviewed so far at 0.24%. In terms of assets under management, you're looking at $3.78 billion and a distribution yield currently showing around 2%. The distributions for VGRO are paid on a quarterly basis. In terms of the holdings that VGRO has, about 35% exposure is to US stocks, 24% or so exposure to Canadian stocks, about 16% exposure to international market, around 6% exposure to the emerging markets, and remaining balance exposure to fixed income or bonds. Lastly, the sixth and final top ETF for growth investors as an all-in-one ETF is BMO Growth ETF with ticker symbol ZGRO. It's available in Canadian dollars with an expense ratio of 0.20%. It has $171 million in assets under management, does pay its distributions on a quarterly basis, which has an annual yield of 2.46%. ZGRO was incepted back on February 15th, 2019. Its return since the inception is showing to be a total of 17.49%. ZGRO is designed to provide long-term capital appreciation by investing in global equity and fixed income ETFs. It does give you approximately that 80% and 20% breakdown, 80% exposure to stocks, 20% roughly to bonds. More specifically, if you look at it, you get about 34% exposure to S&P 500 US stocks. Then you get about 20% exposure to Canadian stocks, Toronto Stock Exchange. You get about 17% exposure to East and Far East Index ETF with BMO, which is international exposure. You also have about 6 to 7% exposure to emerging markets, and remaining balance, aside from a slight exposure to the small cap index ETFs and S&P US mid-size exposure, the remaining balance is actually to the bonds market. So hovering around that 14 here and then another 5, close to that 20 to 21% fixed income exposure. In summary, if you look at the top 6 ETFs, All-in-One ETFs for Canadians, looking for an easy way to invest passively in the stock market at a low cost without having to have the hassle of diversification or rebalancing, these are the list. They are listed according to their management expense ratio, MER, from the lowest to highest. You do notice that on top of the list, HGRO has the lowest fee, and it has a exposure of about 80% to equity. The remaining 20% is to the fixed income, and it has a distribution yield of 0.04%. The fund here that has the highest current distribution yield, 12 months yield, is actually XEQT at 2.7% roughly. And the one, as I pointed out, with the lowest fee is HGRO. And lastly, the fund with the highest amount of assets under management is, in fact, VGRO at $3.78 billion. Now, I did promise to you that I'll be looking into the funds that I personally am invested, having invested close to that $100,000. So let's take a look at it here together. The fund that I am invested in is this margin account. It's actually my Smith Maneuver portfolio account that I have with Questrade. We have invested over $103,000, put the funds into this account, but it's currently down by close to, I would say, around that 3.22%. Total profit and loss is close down by about 5.5%, given the fact that at one point we had some sells and we had some net loss in this account. All in all, currently the open unrealized profit and loss for this account is down 3.3% or down $3,300. The total value of this portfolio at this time is close to that $97,500, as you notice, and it's mainly invested in VEQT. And if we are looking at the performance of VEQT over the past time horizon, the past 3 months, it's down by about 0.4%. Past 1 month, it's down by 3.6%. The past week, this fund was down by just a fraction of a point. In the past 6 months, it was up by 3.8%. And the past 1 year, down by close to 6%. Well, thank you so much, everyone, for watching this video until then. I hope you enjoyed it and gained something of value from it. I would love to hear from you. Let me know in the comment section down below which ETFs are you currently investing in for passive investments. I would love to hear from you. Be sure to leave us a comment down below. If you enjoyed this video and gained something of value from it, do us a favor and give this video a thumbs up. It really means a lot to us and helps us to grow the channel. And of course, subscribe to us here on Momentum Finance. We post every week videos about investing, including investing passively in the stock market through ETFs, as well as investing in growth stocks, dividend stocks, and penny stocks. We also talk about ways to reach financial freedom. Thank you, and I hope to see you all next time.